Hey guys, welcome to another video, and this segment is about Bitcoin as a deflationary asset, or as a store of value that like increases in value over time, being deflationary. So what is deflation? Deflation is the opposite of inflation. And what is inflation? So if you have like let's say a liter or a gallon or a certain quantity, let's say, of orange juice, okay? Imagine that you have that orange juice and you sell it, you produce it, okay? And you sell that orange juice for, I don't know, like $10 a gallon, or whatever that is in liters and in other currencies. Let's use like gallons and dollars as an example. So you sell as a manufacturer and as a producer of orange juice, you sell a gallon of orange juice for $5, okay? And people are happy to buy it, and they pay you $5 for a gallon. Now imagine that the producer of that juice is taking like a bit of the juice out of the jar, and then is adding water to it to fill it up again, and then is selling the juice at the same price, right? That would be fraud, right? Because it's not orange juice anymore, it's like cut with water, okay? But this is exactly what happens with the government money, or the fiat money, or the money by decree, okay? Because in the fiat money system, the government has the capacity and the ability to print money. And whenever the money is printed, it's exactly the same situation as I described for the orange juice and the water. So when the money is printed, the quality of the juice is diluted, okay? And when the government is printing money, the money that you have in your pocket, the purchase value of those money is reduced. And that is why we do live in an inflationary system, right? Because if you adopt any fiat currency, like it doesn't matter what that is, if it's the euro, the dollar, the peso, whatever, the yuan, doesn't matter. They are all fiat currencies, and they all suffer from this issue, this issue of inflation, of being inflationary, excuse me. So whenever the government prints money, the purchase power of the money that you have in your pocket goes down. And that is why, for example, 100 years ago, you would be able to buy, let's say like if you were a man, you would be able to buy like a nice, very high quality suit and a pair of shoes, like the whole set, let's say, with like 1 ounce of gold, more or less, right? And that was back then, like let's say like hundreds of years ago, that was like maybe $5, the whole thing. Today, the same suit with the shoes, the same package, maybe is like $2,000 or $3,000, right? And the ounce of gold also today is like $3,000 instead of like $5 like hundreds of years ago. So as you can see, the gold, for example, was a much better store of value than the fiat money. So because with the same ounce of gold, hundreds of years later, you would still be able to buy that suit and the shoes, right? And but today, but meanwhile, the cost denominated in dollars of that suit went from $5 to $3,000. So ridiculously exploded, right? Against you. It exploded in a way that is not convenient for your pockets, because if you basically hold that money, it's like ice melting. So the more you hold it, and the less you have, okay? And that's why wealthy people, generally speaking, don't keep the money in the bank, they invest it, because they want to counter that inflationary effect, okay? And if you are lucky, and if you do some good investments, like maybe real estate or precious metals and so forth, and then you have expenses to do that, and you have to manage it, to understand it, and all of that, if you can do that, and you are lucky, maybe you can break even, or you can also make some money, some extra money. But if you just hold the money in your hands, it will be like ice melting, okay? It will lose value over time. And by the way, even the other forms of store of value like gold, which we discussed already in a previous video, is not as powerful as Bitcoin because it's got a lot, you know, if you keep the gold in a safe in your home, you have like, you have risks, right? Like risks of burglary and another type of thefts can happen, or you can have other risks like related to earthquakes or fires or flood or all these type of damages that can happen to the property, right? That's one form of risk. If you give the gold to a third party company to hold it for you, you have to trust them, right? You have to trust that they really tell you, because they're going to give you a piece of paper that says it's an IOU, and then you have to trust them that they really still have it and keep it as yours whenever you show up and want it back, that they give it to you. Okay, and we've seen, as I mentioned in the previous video, we've seen now in these days Fort Knox has been, there is a discussion in the Doge department of the US government to audit Fort Knox, and then that has never been audited, or I mean the last time it was audited was like more than 50 years ago, right? Incredible. So imagine that. And so you have all these counter risks and all these situations to deal with when you are dealing with different assets. In real estate, for example, you have people think they own the real estate when they buy a house, but you never own it, because if you don't pay the property tax, the government will take it from you. I mean, if just do this experiment, if you really think you own it, just stop paying the tax. Just stop paying the property tax for a couple of years and see how it ends up, right? Somebody with guns is gonna come and take it, and there is nothing you can do about it. So, but with Bitcoin is different, because Bitcoin, for the first time in history, is the first asset that is basically disintermediating the physical from the virtual, and it's still trusted, fully and directly trustable, because it's algorithmic and mathematically and decentralized, so nobody can control it, nobody can own it or change it. So it's a full network, a fully decentralized network that has a lot of trust and transparency. And then on top of that, it gives you the value of being like non-physical. So you can store it in your head, basically. You just have to remember like a password, and then nobody can take it from you, which means that it adds another interesting layer to this paradigm shift, which is the layer of removing the need of physical violence. It's a complete game changer here. So with Bitcoin, physical violence loses its value, right? So nobody can come to you and take your Bitcoin with physical violence. They can't. Unless you want to give it to them, they can do anything about it. It's not like somebody can like invade another country and then with guns take the gold or take the land or the resources, like you know, the rare earth minerals or the food. Like they can do any of that with Bitcoin. They can invade, but if they don't have the passphrase, and if nobody is willing to give it to them, even if they die, they earned nothing, right? So this is a very important and amazing game changer here. Okay, I'll stop here for this video, and I'll see you in the next one. Have a fantastic day. Bye bye.